in a minute, and then 2.5% up. Look at it's this.
Yeah.
Oh man. And now the U.S. market just opened as well, so it will be interesting. But I think it's gonna be a lot. Like you remember how in May after BTC dropped from 60K all the way down, and it was just like sideways fuckery for a very long time. What is that? Nearly like a month, right? From May to basically July until it found some sort of bottom. That. And I think it's same sort of scenario here. Might be like an upwards direction, it might be like a downward direction, but it's the same thing. It's just gonna chop. It's just gonna chop because people are angry. People are in an emotional state right now where they're ready to be taken. So what's happening, like when you have like a dive down like we just had on 1 minute time frame, it's like people start, like rate shorting into that, and then and they use a lot of leverage because they're gonna make back the money they lost. So you use the complete other way. It's like they're trying to short like a breakdown, and then it just fucks them. This is called a whiplash market, and that's like it's like the last thing you want. If you were just like a happy guy, and let's say you had like 1 BTC before, and now you're down to, let's say you lost 90% of it yesterday or something like that, right? Yeah. So now you have 0.1 BTC, you're down to like $4,700, and just a completely wrong state, right? So what they do is they're waiting for a good opportunity, and then they decide, okay, hey, I think this is ready to break down. This is gonna go deep. Holy shit! I just looked at the liquidation feed.
Just now.
No, I just had a look. It's fucking hilarious. Hang on, let me send it to you. By the way, we're live now, right, Tom?
Yeah, we're live. Yeah, we're live. Hello, everybody. Having a little chat about Bitcoin as everyone comes into the room.
So do me a favor, Tom. Go to b.com. bybt.com.
Okay, sure. bybt.com.
bt.com. Yes, there you go. Yep. And go to liquidation in the top menu. Okay, that's good. And then scroll a little bit down. Period from all to set it to 1 minute. So you see, like if just a few, like a liquidation cascade again. It's just, I don't know, that's like $10 million position being just wrecked one way, and then the minute after that, it just turns.
It just gets liquidated in the other direction.
And this is what I mean by a whiplash market. Like, you don't want to be trading this. Have like minimal chance of success. Like, it's really like a bad, right? It's just so brutal.
That's brutal. That's $3 million wiped out in that minute.
And you got to think east direction, right? So 2% move. So that means that they're using 50 of leverage. They're getting liquidated on that, and that just shows the state of the market. It's like people that just lost a lot of money. They're trying to get a situation like this. The answer is never to keep trading after you lost a substantial amount of money. It's just it's not the time. It's not the time. But even if that is how you feel, be executing it, because it goes for all accounts really. Whenever you have taken like a significant drawdown on your account, and you wanna make it back, or you wanna make more, right? Because you believe you can, you can. It's the wrong time. The odds are simply stacked against you. You do not like. It's the wrong day to try this, right? It's the wrong day to recover. What you need to do is you need to take a step back. And then you have to go through your mistakes. And you have to realize, okay, what went wrong? Where did things go wrong for me? Like what was it that really happened here? Because if you cannot learn something from losing a significant amount of money like that, it will happen again. Even if it's like a one-time thing, and you just kind of forget about it, and you get back on your feet and it's fine. If you don't learn from what happened in that in the scenario where you lost a lot of money, it will happen again for sure. But if you can take that experience, and turn it into a positive thing for yourself, and understand and be happy, and you can actually start to realize, hey, I lost I lost a lot of money in this. I lost a lot of money in that Bitcoin yesterday, and that sucked a lot and so on. But if you can realize that that amount of money you lost yesterday happened for a reason, and you can start to understand that it's actually not so bad. You are not trading with 100K, or you are not trading with $1 million, or you are not trading with $10 million, whatever the amount you were. Just be happy for that it happened at this stage, because there was a guy. What is his name? Bill Hang from
Yes.
the $20 billion screw up, and this guy is fucking.
He lost 20 billion in like a week, right? $20 billion in a week.
I think it was in 2 days, Tom.
2 days. Gosh. And he got so leveraged up by like every financial institution. And it's like, how could you let this guy get access to $20 billion of swaps? Like, what? And he just lost it all.
It was more than that. That was his capital. He had 20 billion. That's what he lost. That was the loss. So he was leveraged.
Oh, he was leveraged way more than that. Yeah, for sure.
He was for sure way beyond that. And it turns out that the guy's trading strategy, his thesis for trading, it turns out he simply believed that he had to let the law, lead him, and that was his trading thesis. And if you're in a 10-year bull market and the Lord is telling you to buy, you can get away with that for a very long time. But if you did not learn that lesson at $100 million loss, or at $50 million loss, or $10 million loss, if you did not learn the lesson there, this would eventually happen. Yep. Eventually, the market would turn around, and you would not be able to take the loss. You would not have learned that lesson, that because that's the thing. When he started getting the margin calls, and he already knew he was in shit. When this guy started getting margin calls from the brokers saying, "Hey, we need you to post collateral right now," if he had just said, if he had just said, "Fuck it, just close it out," he would have been out with $10 billion. He would have lost half of it, but he would be out with $10 billion. He would easily have been able to come back from that. The problem is he did not have that experience of using a stop loss. He did not have that experience of cutting his loss when he was just in the wrong. So if you ever put yourself in a position where you lose a lot of money, be grateful that it's not more than what it is you lost. You might think that this was like it's not. Especially not if you work with your mindset that. So that's it, guys. Welcome to the stream.
Welcome.
This is Tom, and asking questions, Tom.
Just everyone saying hello. So we'll just say hi to everyone who's joined us here. Remember, guys, make sure once the video is posted, so straight after this session, it'll go live on YouTube. So just make sure you leave comments. Remember, every comment you leave all through September is going to give you another chance to win that $10,000 funded account. With Breakfree Funding. So that's really exciting. I'm loving the engagement that we're getting on our videos from all of you guys. So keep that up. It's really good to see that. So keep it up, and then we're going to give away this account at the end of September. I was just thinking, a bull market can make someone look incredibly smart for a very long period of time. That's kind of what my comment was on the on that whole story.
Crazy, especially when you just got these continuous bull runs where fiat money, like US dollars, is depreciating in value, and everything else is basically turning into a bull market against it. Well, then, that's how Buffett made his money. I mean, sure, he made companies that looked like shit but weren't shit, right?
Yes.
But in the end of the day, like he was just a long guy. I don't think this guy ever went short. If anything, he just goes cash neutral. He just goes into cash. But
yes,
that's also like the entire trading thesis around our strategy mode. It's like, it took me a very long time. It took me a very long time to realize, like, hey, whenever you have a market in an uptrend, there's absolutely no point trying to short it. You might want to, and you might, a lot of times I realize the reason that people do this a lot of times is because they look at a market, they look at how much it has moved up, and they think, hey, if it moves this much up, it can probably move that much down again. And I didn't catch it. I didn't catch the move on the upside. I didn't get to catch all that value from the market moving up, but I can catch it going down. And I know when it's going down a lot faster. So that's the fallacy. That's what people trick themselves into belief. But the problem is, it doesn't work. You are exposed to like the odds are stacked against you. You are whenever you're taking short positions versus long positions, the risk that you're taking on is infinitely higher than it is when a long position. And unfortunately, it takes people a long time to realize this. But this is also why we don't fuck around with uptrends. Like when we have a strong uptrend, we don't try to short it. Like it's a really bad idea. And yes, you can make money sometimes, but the idea is that you become a person who can sustain in these markets. That you become a person who, consistently over the many years to come will be able to survive these markets and be able to participate and extract money from it. Like that's the goal, right?
Yeah.
And in order to do that, you gotta stack the odds in your favor. Like you gotta put these odds in your favor. If you're not putting odds in your favor, you're basically playing against yourself in the worst odds, and it's such a bad idea. It's such a bad idea. And
people have made billions going long only, right? Billions going long only.
It's the easiest way to trade. It's like find a strong uptrend, wait for the pullback to a key level, buy it. Right? It's so simple, but people tend to fuck it up all the time, and that's because that there's a lot of execution when it comes to it. That's what we have tried to fix. That's what we have tried to fix with TradeGuard. This is what we have tried to fix with direct execution from the chart. This is what we have done with navigators. That we want to give people the ability to execute this idea of the same way that Buffett had been making his money, and everyone else who has like truly extract like massive amount of money. This is what we're doing, and we want to teach you this as well. So it starts with follow the trend, and if you want to go short something, that's fine. You can go short something if you like that. Go find a strong downtrending market, short that. Don't short the uptrend. Okay. So
we got a question about NZD USD. We just mentioned this one before the stream as well. What do we think of it? So we've got it placed here. Looks pretty good. Looks good. Nice little reaction here on this candlestick around the level. So overall, I'd be happy to jump into this trade. We've got a decent bias, an average uptrend here, which is good. We've got some good structure around here, around this level. So I think it's a good buy. What do you think, Asger?
Yeah, I think it looks good. I think it's an ideal trade, at least for TP1, and then we see then we get to see what's up when it gets to TP1. I think these are exactly the sort of trades that we wanna look to take. It's ideal trade really.
Yeah, for sure. I mean, like we've had this little consolidation through here. We kind of broke to the downside, faked some people out here, and then punched us into support and ripped back up again. So, I could absolutely see a continuation up here, and then maybe, consolidate a little bit around here, and then maybe we kind of expand out, break through these extensions, continue on with this uptrend, if that's what we end up, if we stay in this uptrend overall. But I think TP1 and TP2 is very, very achievable.
We have
USD, yeah. What's going on here? Make trend your friend. Yeah, for sure, Bishal. Make the trend your friend. The trend is your friend until the end when it bends, right? Okay. I think this is pretty reasonable again if it comes back down here. It's been repeated maybe a couple of times already.
So this is so not exactly super correlated, but it would be nice to get long exposure on USD at the same time. That would be really nice.
Yeah, spotted this one in the weekly hedging. We did a hedging video in the essentials last week, so while we placed them. And we've actually got a hedge here on Euro as well. So Euro, Pound, Euro, NZD as well. So if we can catch entries on these two, for us, we'll answer any questions you've got that's currently running. We've got Euro CAD open at the moment, all right? So Euro CAD currently open. We've just taken TP1, so we wicked into TP1 here. Unfortunately, we didn't take TP2. If you're in front of the chart and you're seeing this happen, you've really got to just take that profit, right? If you're right there, this is one of those times when if you're on the chart, you've just got to go, okay, cool, I'm closing that right now. I can't afford to know what it's just done right now. We need to be taking that, especially when you're trading low time frames as well. This is why we say you've really got to be watching those low time frames, because you just got to take that. You just got to take that profit
Yeah,
when it's
and
at that type of point.
the different, what's different with the reason that people are getting different levels of success on the lower time frames is because it happens on a much, it's much faster. Like the reaction time you have in order to like decide when, if you're sitting on the screen, you're watching your 15-minute trade and it's coming to TP1, and it hits it hits your initial first TP, and then you're waiting for the second one. It's not quite getting there. Close it. Just close it. That's what you got to do. And that maneuvership that involved in the market is very different from 1 day time frame. Like in 1 day time frame, you probably have an hour, 2 hours to do that. On a 15-minute time frame, you maybe got 30 seconds to do that. And so it's very different. It's you got to react much quicker, and that's one of the reasons. So just always remember, if you're trading 1 hour, 15-minute, so even 4 hour, it's good to set alerts at these levels. It's good to set alerts and then just have a look whenever getting to TP. Just make sure you're getting out of that initial TP1 target, and then you can chill. Move your stops to break even, or we can wait for TP2.
Yeah, for sure. Yeah. So that's a good point there, for the lower time frame traders. If you are dabbling in lower time frames now, just take your profit when you see it there.
So we have a question, Tom.
Yeah.
About New Zealand dollar and the developments of DXY. Actually, I haven't looked at the dollar index.
Yeah, me neither. Let's take a look. NZD USD. So obviously we've got the sonar trade there. We need US dollar weakness and New Zealand dollar strength. And we've got DXY here. Some big gaps in DXY, sorry. Last week we talked about this idea that we were probably around here last week somewhere. We talked about, punching into this support level and maybe giving us that opportunity to get out at break even on Aussie dollar, US dollar. We just gapped below it a bit too much. We gapped below it a little bit too much. But now we're seeing that bounce off this 75% alignment level. All right. So we need weakness on New Zealand dollar. Yes.
It's tricky here, right? It's tricky here because we have some pairs doing some different funny business right now. So that's why we really would like to get exposure in both directions. We would really like to be hedged in this situation, our positions. We would really like to be long on the US dollar on strong pairs at the same time as we are short on it on this weak pairs like New Zealand dollar, US dollar. Mm-hmm. And that's really powerful. Like if you can just think about that concept of being long on one pair and short on another pair at the same time, that's really like professional level hedging we're talking about, and there's very few traders that even operate on this level. Like that's the kind of stuff that the professional boys that I just talked to you about this before the stream, so that they are doing. The guys who are always winning, and it would be nice. But so I think we have a good opportunity in USD CAD. If DXY pulls back here, it might give us an entry. Mm-hmm. And it might propel this New Zealand dollar into profit. So that would be really good for us. If we could get this New Zealand dollar, US dollar, all of these positions filled, and we can get this pullback on DXY again, that would be perfect because that would propel our New Zealand dollar position into profit at the same time as we're able to get into a USD CAD position. And that means that they should at least be some sort of correlation because they are, they're based in the same market. And that mean even if New Zealand dollar pulls back after that, that should prompt our USD CAD position to move up. And that's really good, right? Because that means that no matter what really happens, you win. And that's what you want. That's the kind of position you want to be in.
Yeah, absolutely. The idea here is that let's say we do push up into this 75% alignment level. What's that going to do is it's probably going to from this 75% alignment level, right? Let's say we see some weakness and we start forming some sort of like range in here kind of thing. Like we're already kind of doing. We're there, it's happened in the past, there it's happened all these times in the past, right? What that's probably going to end up doing on this is taking us back out of these entries. Profit, move it to move our stop loss to break even, and then it's about, well, do we continue to see weakness beyond this 75% alignment down to say 90.63? That's probably going to throw us up into our TP3 up here. But let's say we do continue to see strength at 37.75 on DXY. Probably going to see weakness. We're out at break even. That's going to put our US dollar CAD position, the correlations we're thinking about between those three markets, essentially, visually. Yeah. And it's interesting that the stream, like you said, talking about correlations, and whenever we would put a new position management, right? You don't want to go and put Russell 2000, S&P 500, US 30, all these different positions in a portfolio. It's like, okay, cool. We've got like 90% correlation between the entire portfolio right now. Great if US equities pump, but really, so,
yeah,
you're looking
on clients' money. That's So how are we, speaking of the Russell, how is that? Is that US 2000?
Yeah,
Why don't
US
we have a look?
2000. Let's look.
Because I was looking kind of fuckery last week. I would think it's down. Let's have a look. Okay.
We got a trade. This makes let's pull S&P 500 out, because 100 Standard & Poor's top 500 companies in the US, based on obviously market cap, profitability, a bunch of different things like that. Russell 2000 is the 2000 small cap companies. Okay.
Steep. The SPX.
Yeah, this is a high altitude market. Look at how the price action has been in the past in this market as well, right? Candles, very low volatility. VIX would be bottoming out but then we just have these 2 days where we just dump down into a strong support level. Exactly the same thing here.
With VIX long, I think there's a lot of money being made there. I think so. I mean, it seems almost like to make money.
Long volatility.
Yeah, it just seems very.
We talked about this again in the weekly market review. On Monday we were punching into this level here, right? And pretty much on it's like, you kind of know that it's like, okay, we've had low volatility for too long. It pretty much generally leads to spikes in volatility at some point when we get down to a certain level in VIX. And right now we're seeing the same thing. It's very easy to see. And, if we see VIX push up to 2188, very likely, I've got a lot of open here, but hopefully people can see, very likely we push into 44.53 here on S&P 500. If we get VIX up to 25, we're probably going down to 43.75 on S&P 500. So, all about what we see here on the VIX S&P 500. But the Russell is a strange one. The Russell is really weird in the way that it's consolidating when the S&P 500 is just absolutely pumping. Like, would you take this trade here on the Russell?
I mean, no, I would rather not, because look at that level. Yeah. That level has just been.
You know what this reminds me of, Aska? Our call with the funded traders last night, right? We went through, we did that big interactive session on just going back and looking at Aussie dollar, US dollar. This reminds me of the exact same price action in the Aussie dollar, US dollar. Consolidation, parabolic move, consolidation, assuming uptrend obviously continues. But for me right now,
yes, you can take the trade, but look at all these times where it
I wouldn't be taking this trade here. I would be taking the trade when we break extension 2, come back.
Yes, if we had to, if we that could be something. Honestly, still just looks boring. Look at the support level though. That's ridiculous.
That's a lot of tests. Yeah, for sure. This market is like I said, it's really strange to see a dislocation like this between S&P 500 and Russell 2000. You don't see this usually. You don't see this.
How much is that up compared to since the COVID bottom?
Yeah. Let's go to all-time highs.
That's 59%. Yeah. How about the SPX?
All right.
That must be nearly. Is that correct?
Is that right?
I don't.
You're right.
That should be about 100%, no?
That should be well and true.
Well, I think I'm gonna ping the
Okay.
engineers about this, Tom.
Yeah, get him onto it, man. Because you know, my math tells me that 2200 times 2 is 4400, so it's at least 100%. And what do we got here? We're gonna just have to do this the old-fashioned way.
Something wrong. Okay, well, we're gonna drop a ticket on that, and the engineer's gonna have a look at that. But actually, I remember now. Actually, I did do this as well on another market. I was wondering, there's something off about this. Something off about this. That's fine. No worries. We're gonna fix that. It's not a problem. It's funny no one has reported that yet. Maybe it's a new bug. Could be.
Yeah.
Anyway.
Oh well, it doesn't matter. But yeah, you know, it's just strange. The price action just doesn't look the same here, right? You know, and when you look back at, you know, history of these two markets, you know, you could put these side by side, right? Put these side by side right there.
It's very similar.
Very similar.
I mean, and you're gonna see the same on the Dow Jones, and you're gonna see the same on well, NAS 100. NAS 100 might look there. Actually, I think NAS 100 is way off these levels. Have a look at NAS 100.
NAS 100 is like, yeah, that's basically FANG though, right? You know, NAS 100.
I have to tell you the story. I had a guy come to me last year, right before the COVID dump, and these were some people, you know, they had reached out to him, some scammers, and they had got him to deposit, I think it was around $10,000, if not more.
Yeah.
And they had run his account up to about $30,000 or $40,000 from that. He hadn't made any withdrawals. So actually, I don't know if it was real. But when he came to me, he showed me his screenshot. Okay, I have the screenshot. I can find it. He showed me the screenshot, and his buy was the absolute top of the market of the NAS 100. Like, it was the absolute top before the COVID dump. It was like literally to the point, and I was like, how do you even get filled there like this? I mean, that's ridiculous. And he was sitting there, and it just kept, you know, it just kept going down. I'm gonna try to find this screenshot. It was ridiculous. I felt terrible for the guy. He hadn't told his wife, and he asked me to fix it. And I was like, well, what do you expect me to do? I said we can try to hedge the position, and maybe we can salvage 15K. But how do you even know if these guys are gonna pay you the money in this account? Like, I think they're scammers. But even if they are scammers, how did you even get that position? Like, how did they buy that? It was ridiculous, because it was literally on that, like, that spike, like that that top.
Right, pretty much right there, yeah. Let me look here. Still look like February 20th, something like
9,678 or something. It was ridiculous. I was just surprised, and I was like, holy shit. And then he showed me another account, and it was like the same. It was even worse. I was just like, holy shit, what the fuck? And I was like, did these guys fill their own position with this guy's money? I don't know what was going on. It was very strange. But anyway.
Yeah, I remember this. I remember this being like, you know, dealing with clients and so forth when this was happening, right? You know, we filled a guy right here, actually. It was just random luck kind of thing, just DCAing into the market, and filled him right here, and just absolutely ripped. But anyway, yeah.
Anyway. But how much? Okay, the bottom was at 70,000 something, and where are we at now? 15,000.
Yep, 15,000.
Holy shit.
15,600 from 6,600. Yeah, so
that's nearly 300%. Jesus Christ, that's nuts. That's fucking nuts. They gotta be. I mean, they got that. Something gotta happen at some point with this. I mean, there has to be some sharp self again, just like we've seen with Bitcoin. For sure we're gonna see some, because you gotta liquidate. And I think they found out last time. I think some people found out last time that it was extremely profitable. That March crash, like, it was extremely profitable. Yeah, the initial deviation, expensive. They had to cut their loss. They had to just you know, sell off whatever they had, that initial. But after that, the fills they could get at the bottom, I think they liked it very much, because they don't have to worry. They know liquidity is going to come back and come into the market. It's just an initial panic. Like, no, the people who were selling down there, they didn't want to sell. It's just like that BTC yesterday, at 43K. These are not people that want to sell down there. It's that they're forced to sell. Like the guy who bought the top, he's forced to sell down there in a liquidation event. And what I told you, Tom, liquidations are entries. Like it is the I'm sorry, we're just ramping here. Are we getting any questions?
Yeah, we've got someone just saying about the scammers in Telegram. Guys, we've got the Kill a Clown promotion, all right? So we do the Kill a Clown thing. So if you do get message from a scammer, right, it's pretty clear to see that they're a scammer when they start talking a bunch of...
If anyone messages you,
if anyone messages you first, assume it's a scammer. Basically. Always assume it's a scammer.
It's like a guy walking up to you on the street and saying, "Hey, you want to know about auto investment? You can give me $300. I'll give you $3,000." Hey, come on, I mean, guys.
And just waste their time. Literally, make them talk. Make them talk all like. Just waste their time completely, and we'll literally pay you for it, right? We'll send you money at mid-month. We do it. Top 5 people that wasted the scammers' times, we send them $100 each. So if you're in Telegram, you get approached by a scammer, waste their time, take a recording, just scrolling through the conversation that you've got. We'll count up all of the messages between the two of you. Top 5 that we get of those videos, we'll pay you $100 a piece. All right. George had fun with that one. He sent me some screenshots. It was a wild ride. Someone's saying, can we ask questions regarding X mode? Absolutely, you can ask questions regarding X mode. You can ask questions about anything. Put any questions you want whatsoever into the chat, and we will answer them. If we don't see questions, Asger and I just ramble. We're good at talking, so we'll just ramble a lot, all right? Keep us on track.
We can talk for hours. I'm gonna find the screenshot meanwhile of this guy buying the top.
Dave, of course you can. Yeah, Dave, absolutely. Dave, if you've got any questions as well, throw them into the chat. If anyone has questions, put them in the chat. Need to understand the combination of dots. Like, how do we understand as they suddenly appear and disappear on trades going on? Good question. Okay, cool. Let me just give you a little, a very brief X mode masterclass while Asger finds the screenshot here. So, X mode shows us market structure, right? We all know X mode shows us market structure. I believe it can be a small answer. Yeah. So, X mode shows us market structure. We look from left. Oh, you found it? Okay.
Send it through to me. Sorry.
So we read X mode from left to right. Left being the longest term market structure on that time frame, and then as we move to the right, the market structure on that time frame becomes like shorter and shorter term. Okay. Now this market moves. These dots move between the 50% retracement of the different levels of structure in this market, okay? So what you'll see is, let's just jump into like replay mode, for example, here for a second. Okay, it's exactly the same. Here we go. So we've got just like a random dots all over the place here. And what happens is as these dots align, as market structure aligns across different, time frames, different periods of time, then we get alignment. So 75 and 100% alignment, they're our key levels in this market, all right? So you can see here how they move, and we've got the 75% alignment. You will note right at the 50% retracement between these two important levels right here, being the 75% alignment zone. Okay, so as the market moves, as price action plays out around these X mode levels, these are going to change based on the shorter term structures. So what you'll generally see here is like as this level gets breached, these S's are going to move down and shift into this zone here, and that's going to become 75% alignment. Okay, at that 50% retracement, because you can probably see on a lower time frame like a hard support level being in here, a circle support level, whether it be like a 15-minute time frame or a 5-minute time frame or something like that. Okay. Once that gets breached and invalidated, it shifts down. That's why they move.
Good explanation, Tom. Okay, so I sent you the screenshot in the Skype chat, Tom. There's nothing confidential, so you can just open it up if you don't mind.
Yeah, sure. Let me get it. Chat. Skype. Okay, here we go. Just gonna have to change.
Sure.
Okay. I think we should be able to see it now, I guess. Yep, there we go. So we can see it now.
I don't see anything, but maybe.
Oh yeah, yeah, true. We've got to change what's. You're not
There
going
it
to be
is.
able to see it though, so because you're on the Skype chat, so you're
I
gonna
see it now.
on the
Yeah,
first.
no, I
Yeah.
see it on the stream. I can see it. So, so you can see this guy. He's just in a whole mess. And I think this is after I helped. Well, I tried to help. I told him I just hedge it at this point. I think that was 9,500 when I told him to start hedging.
Okay.
But he was just in a world of shit, and they were calling him hey, you gotta deposit money for the swaps. Because I think that's how they were really like extracting money from him, is that they were telling him these positions cost a lot of money in swaps. We can't deduct it from the balance. So you gotta send in you're gonna send in capital to us to cover the swaps. And it's just, that's a very bad day.
Yeah, that's just, so. Just tell me about this. Let's just. I'm confused looking at it first of all. So, is this after you told him to start hedging? Is that why we've got the sell positions here as well?
If you go back to NAS 100 on Navigator.
Yeah.
Actually, don't worry. I just have this screenshot. I gotta read the chat. Holy shit! I wrote a lot of mess. Yeah, that's. I believe that's. Oh god.
Because so yeah.
So go to 1 day time frame.
Yeah.
And then back to
COVID.
Yeah, and then go to like the very top of that, and then mark out the position with the horizontal tool of what was it 9742.
742. How did you get in at 9742?
I was like, how did you do that?
What? How did he possibly do that? That's you can't.
Yeah.
Oh, what's going on here? There we go. Horizontal tool. I've never seen someone literally buy the top like that.
And I was surprised. I was like, how did you get that fill? I was like, did they fill him? Did they fill him and then be on the other side of his position? I was like,
what? But even if you did, you can't know that this is dumping like right now at 9742. Like it's.
So yeah, he came to me, right? He came to. Let me see. When did he come to me? So he came to me the 24th February.
Yeah. Okay.
And we hedged that.
You sold at 9525, right?
So yeah, I told him like, if you want any chance, you gotta hedge it here. But there was all these other positions as well. It's like really like a nightmare.
Oh, you did him okay though. Like you actually 9525. Like you.
Yeah, I mean,
you saved him a shitload of money. Like he only.
The problem came that they kind of took control of his account, locked him out, and I don't know. Yeah. I think the last message. Let me see, what was the last message?
Yeah, basically you've got like, okay, we'll show the screenshot again here.
Oh fuck. Well, I told him what I could tell him. That I also in my life have been truly fucked many times, like really like many different times in my life, and it was gonna be okay. He had to have the talk with the wife and so on. But yeah, we hatched around there, but unfortunately we lost. I don't know, but I wasn't involved for much longer than that. I think what ended up happening was that he closed out that trade. We think we were closing out the trade, and then as we wanted to close the trade, they would not allow it, something like that. But in hindsight, it still went deeper than I thought. The idea here to like at least try to maybe save, 20,000 or something, was that to close out the hedge at a potential support, let the bounce, and then close out the long position from the top, right? Yeah. But very difficult to execute at that point.
And swaps on this as well. Like there's a lot of positions open here, and I mean, you saved him from liquidation, basically. Like stop loss was liquidation by the looks of it, but you can see, these hedge positions, these sells here, obviously all the hedges that were put in.
And the problem were they were also taking positions on USD TRY, which is US dollar, Turkish
Turkish
whatever the fucking
lira or
currency is.
whatever. Yeah, lira.
Lira, yeah,
Yeah.
Turkish lira. The problem is that takes up a shitload of margin. Being
Yeah.
long on that, like those are, that takes a lot
Huge
of.
swaps on that as well, and also South
Yeah,
African rand as well.
very,
You've got rand, you've got lira.
yeah.
Natural gas is like kind of exotic as well. I mean, you've got some swaps on this too. I mean, he would have just been destroyed in swaps with all this open. I don't think he could have sustained this whole month period of the recovery back to breaking even. Yeah, you know, damn, learning experience.
Yeah.
That's
So
interesting.
yeah,
That's
that's that happens from time to time. I deal with some pretty difficult cases, and
yeah,
um,
for sure.
but hey, that's how it is. And
Let's jump back. Aussie dollar, New Zealand dollar. We've got a question from PK, is it? Yeah, PK. Aussie dollar, New Zealand dollar. Let's look at that. And then we've got Donovan. I just phoned Tesco, had some tissues delivered to my crying Bitcoin friend. He's asking for more. Okay. I think you mentioned that your friend was like leverage long on Bitcoin and you told him that to close
he lost 41,000. Donovan said, "Well, Donovan, you gotta be the good friend here. You gotta. I mean, it's not gonna help. That's not gonna help him. Let him cry all he wants, but you gotta help him understand that there is a unique opportunity that can change his life in the next 10 years. There's a unique opportunity with crypto. And yeah, he will lose some money, but he should really take some time, understand what happened, and then understand that there's a way back from this. There's a way back from this. And if he can, like I talked about in the beginning of this, is that if he can take this lesson here, he will not have to. Well, hopefully he will not have to suffer it at 400K, or or it could even be 4 million, right?
Aussie dollar, New Zealand dollar, 1 day. Thoughts, please. Okay, Aussie dollar, New Zealand dollar, 1 day. In general, I'm not a big fan of Aussie dollar, New Zealand dollar. Okay.
Yeah.
I'm not a huge fan of it. It's too choppy for me in general. Like, look at this. Let's just zoom out a little bit.
It's kind of fucked, and it tends to not really respect levels, and it tends to do all kind of crazy shit.
Yeah.
What the fuck is this, Tom? What are we looking? Holy shit! Oh my god, that just looks horrible to trade in general. Yeah, not
I mean,
not of.
You can see X mode framing it up really well though. Frame up this.
Yeah.
Just.
I mean, it's usually on point.
Let's chop. Let's chop for the next 5-6 years. But yeah, I don't love Aussie dollar, New Zealand dollar. It doesn't usually respect levels. It chops through everything. Just because Australia and New Zealand, from an economic perspective, are very similar, right? Very similar. We've got like the only place Australians can travel to is New Zealand, COVID bubble, all this kind of stuff. Right now, if we're just looking at it from an objective perspective, forgetting it's Australian dollar, New Zealand dollar, we're in a strong downtrend right now. We're pushing into support. Absolutely nothing to do. But when I add that it's Australian dollar, New Zealand dollar, I go, I'm just not interested in the market at all, kind of thing. So, yeah, right now, absolutely nothing to do. But if it was like gun to my head, I had to trade in this market, probably trade something there, or probably trade something around there, I'd say. If we had if we had a move back up, that would be probably where I'd be looking short, assuming we're still in a downtrend. Let's say we had a big spike up like this, just rip to the upside. I'd say a short on from there might be reasonable, something like that.
You know what? I should send that guy a message. Hear how he's doing.
Yeah, you should. Absolutely. But yeah, gun to my head, that's what I'd probably be looking at there, PK. Gun to my head, you have to trade Australian dollar, New Zealand dollar. I don't love the market, though. I don't love it when you look at this price action. Just look at this chop. Cool. All right. So we've got... Hi, Samuel. Thank you for wishing me the best. Appreciate it. Thank you for wishing Asger the best. All the best to you, too. What else we got here? Please ramble on. Educational from Donovan. Yo, Asger, who do you guys think has the fat finger that crashed crypto 10% yesterday?
So it's not a fat finger. what it is that it's an event that takes place, and it happens in all markets at certain levels. Some markets are protected from this in terms that they have like breakers in the market, meaning that the market will actually halt and it's not going to continue. But this is crypto. Yes. It could literally go to zero.
Yeah, so circuit breakers, right? If S&P 500, what is it, 5%? No, what's the circuit breaker?
They have three different ones. They have three different ones. They 5%. I think it's.
We hit it actually, 3 times in COVID.
There's 3, and there's even like a complete closure of the day as well.
Yeah.
So what happened yesterday is that at a certain, when you have a market that starts dripping slowly down and it doesn't really bounce, what happens is that people who are buying with leverage, they slowly start to get piled into like one group, and they're all long at the same time, and they already bought all they could, and they're now in these positions, and they don't want to sell them, but they have to because they have a liquidation price. And what happens then is that as the market continues down and it becomes, the further down the market moves like this, the more liquid it becomes. Liquid means the less buyers have prepared to buy at these levels, or there might even be like a complete gap in the market where there's no buyers. This is what you saw from about 47,000 all the way down to 42,000. There was just simply a lot more sellers in the market than there were people ready to buy at that certain time. And what happens then is that in a quick sweep, the market will do a 10%. It will do a 10% drop in minutes. And it means that people don't have time to react. They don't have time to post collateral. They don't have time to do anything. And what happens is that they are bound by the contract of these markets that they're trading to liquidate the positions, and it all happens at the same time. What happened yesterday was that it was a total liquidation event of, I think in the final hour it was 1.7 billion in just a few minutes that was just being market sold, right? So you gotta find buyers for 1.7 billion dollars just like that, and if they are not there, then it will just sell all the way down until it finds like it's literally an engine that just takes over and just keeps selling until it's done selling. It's like a math algorithm that just runs, right?
Yeah, for sure. And why? So we started on wire liquidations entries. We started on wire liquidations entries like at this level here, 43,750. But we never got to finish it. So I think that would be beneficial for people to hear about why liquidations are entries.
Tommy and the Tommy said he lost. Tommy said he lost $1,500 on a demo. Tommy, could you say what trades you lost that on? And,
let us know the trades, Tommy.
And I don't think it's bad losing $1,500 in demo. It just gives you the understanding that this goes both ways. It goes up and it goes down sometimes. If you lose $1,500 on a 10K account, that's not too great. It's 15%. So you would have to lose about 5 daily trades in 1 month. So something is clearly off, but we are surely able to help you.
Yeah. Hey, Tommy, also, mate, take a screenshot of the trade history. Okay. In the history tab, take a screenshot and then send it to the global chat. All right. Send it into the global chat. Plenty of people there. We'll take a look at it for you. All right. And we'll talk through, what happened here. My guess is it's probably overexposure to single currency, multiple trades, on correlated markets, something like this, that last week or whatever just took stop loss. Okay.
Mm-hmm. Yeah. Liquidations as entries, is that applicable for Forex? Well, it's difficult to identify liquidations in Forex markets because in crypto markets, you literally have an event as these cells are processing through the market. They literally get tagged as liquidations, so you know that they're liquidations. In Forex, it can be difficult to know exactly when they're liquidations. But generally, yes, as long as the conditions for buying is met. I mean, you don't want to buy a liquidation event in a bear market. You don't want to buy because that means it's probably just going to go lower. You want to buy a liquidation event in strong trending market. So, like if we're in a strong trending market and we get a liquidation event, yes, you want to buy it. And it actually doesn't matter which market it is, as long as RTD is somewhat strong and uptrending. You want to buy as it comes into your support. What you have to understand though is that a lot of times as markets get, starts rolling and they liquidate into entries, you have to understand it will often happen on multiple markets at the same time.
Yes.
And the difference between a trader who makes some money from it or no money from it and a trader that makes a lot of money from it is the trader who has done the homework already of knowing which market is the strongest one, which one is the one I want to buy from, which one is the one I'm prepared to buy on. Like, you got to understand that at any given time this can happen, right? Mm-hmm. So once you understand that at any given time this can happen in just from hours to minutes, like you literally don't know what can happen. I just read about that they're thinking they're looking to some solar flare events that's gonna happen again, and these are some pretty heavy events that can take out like actually all the electronics on our planet like in just like one swoop, right? So at any given time, anything can happen. Any market can roll over, and you gotta know which markets it is that you want to buy. You can't just react to it when it's happening and just be, oh, I buy here. It's like whenever you're looking at a market, like we're looking at SPX right now, right? We're looking at SPX right now. If this market is gonna dump, we know we're ready to buy 43.75. Right? That's like I'm a buyer here. No matter what, I will buy this. Mm-hmm. for today and tomorrow, right? Yes. I will buy here. I will buy as much as you can sell me, really, right? But if it continues on and as time expands over this, it really changes like which levels it is that you want to buy.
And, for sure. The liquidations thing, the liquidations question, as well, that George had. You wouldn't necessarily call these candles like liquidations in S&P 500, right? They wouldn't be tagged as kind of liquidations like they are in Bitcoin, but it's a deviation away from a strong uptrend. These are strong deviations away from a strong uptrend, and every single one of these deviations you could trade back to the overall mean. Like let's say we just drew like a line through here. We just drew like we said that was like the mean of the market. This is not a trend line. This is just to say like, okay, well, if we just break this market down into a mean, linear uptrend, a mean linear uptrend, and said, okay, well, when do we deviate heavily away from this mean? And when can we buy it back to the mean? Well, we deviate heavily away from the mean there. We deviate heavily away from the mean there. We deviate heavily away from the mean there. And it's kind of just a cascade of selling. Big deviation, big deviation. And in all of these cases, because we're in such a strong uptrend, we just know that there's so many players that just want to buy S&P 500, and there's so much money pumping into the US economy, right? There's just money getting printed all the frickin' time, right? We know that we are super, super safe buying any one of these strong deviations away from this overall mean, trade it back to the mean again. So let's
for a certain amount of time. Right?
For a certain amount of time.
Yeah. So I actually have an update from the guy. I texted the guy. Okay. I think we got to talk about this for just a minute because Donovan, you're talking about your guy who lost 40K, right? Mm-hmm. And that might seem like a lot of money to him. But people don't understand how infinite worse life can get, how infinite more money you can lose, how infinite more you can indebt yourself from a loss. Like people don't understand this, and it's a lot. So I talked with the guy. He just messaged me back. It's not good, guys. He's 700K in debt.
What?
Yeah, I'm gonna talk a little bit more with him. See, I don't know if I can do anything, but. You have to understand at any given time, your position in life can get infinitely worse. So if a 40K loss yesterday was bad, you have to understand that could be 400K, that could be 4 million, that could be $40 million. And it is really dangerous to play with financial markets like this. You can literally ruin your life quicker than any other way in life, And this is part of the reasons that I started working on Breakfree Trading back in the days. When I saw what it did to me and what it did to a lot of my friends that I started trading with, who just, things turned very bad for them as well. And I started to realize like this is something that happens to a lot of people. This is something that a lot of people get involved in, and it for some it they end up taking their life because it's really bad. So once I realized how bad that was, I also understood that something had to be done, and I decided, hey, this was going to be my thing. I was going to try to solve this, and I didn't know exactly, but I realized there had to be a way. And I knew it started with one thing, and the first thing was that we don't trade against the trend. Like we don't do that, and it's such a core principle that is just really really important to understand. And it makes me sad to see and hear when this happens to a guy like this. But so you saw that screenshot. It was a 40K loss. Hey, 40K, it's not too bad,
Yeah,
40, it's not too bad, but that can get infinitely worse. And that's why we made Breakfree Trading. It was to give people an actual chance in the market to have an actual edge, have an actual chance at succeeding in the markets. And that's the reason we do the way we do things. So whenever I get emails in my inbox from people who are complaining and so on, it's because they don't fucking understand how fucking hard it is. Like how difficult it can be to be engaged in these markets. Like they don't like. There's a guy who, Tommy said he lost $1,500 in demo. I'm like, that's fucking great. Yeah. I'm so fucking happy you lost $1,500 in demo and that was not your real money. That's the whole fucking purpose. That's a fucking success story. People trade 1 month with Breakfree Trading and they are break even. That's a fucking success. People don't get it. That you just went 30 days in the market in a fucking situation where most people lose all their money and you're break even. That's beautiful. That's exactly the fucking outcome I wanted. Now, if you can make some money as well, if you can make some money, and I know you can by following the strategy, I know you can. If you can do this and over time make this work for you, that is the fucking goal of this. So I'm happy to see the people succeed. And I also understand there's some people that get this, there's some people that don't get it. Those people that don't get it is because they don't know how bad it can be. They don't know how difficult it is, right?
Yeah.
So just keep that in mind, guys. Life can always be infinite worse. Be grateful for what you have. Be grateful for your losses, that they don't extend more than they do. And understand, even if you feel like it's the worst that you lost in your entire life, it's not. It could be much worse. It can always be much worse. So that's not to make things too depressive on the stream. It's a really important message that I think often get lost. People don't realize how successful they are if they trade 30 days, 60 days, 90 days, and they are break even. They don't understand how big that is compared to the people that blow their account. It is such a
like 90-90-90 is true, right? 90% of people lose 90% of their money.
It is very true.
In 90 days. This is true.
It is very true. So that's why we do what we do. And we're going to keep doing it.
Absolutely.
Yeah, Don, you go talk to your friend. Guys, if you have any last questions, this is the time. Tom, I told you about this salmon I cooked tonight, right?
Oh, you did. Yeah, you said it was great. Salmon. Asger's cooking a lot of fish lately. You're on a health kick, man. You're on a bit of a health kick.
Well, yeah. Well, COVID comes around, you start to realize, hey, this thing is, it is a very, like, if you look at the people dying from COVID, you realize it's a very specific group of people that die.
Yes.
It's most people who are not healthy. And I am not as healthy as I could be. I'm not. I have other things in my life under control, but my health could be better. I'm working on that. That's a new project for me. So the fish is on the table, and I mean, yeah, there's a little bit of rosé wine from here and there, but the fish is on the table. The potatoes is on the table, tomatoes, and we are reducing the junk food. It's good. It's healthy. It's gonna make me better. It's gonna make Breakfree Trading better. It's gonna make the trades better. It's gonna make us more money. That's what we want.
That's right. That's what we want, man. That is what we want. We got a question about XAU USD from Eugene. Thanks for the question, Eugene. Appreciate it. And thanks for contributing so much to our session last night as well. Appreciate you, Eugene. XAU USD 4 hour. Can it go lower in your opinion? Oh, I don't like taking directional bets and such things.
Could go down. It is scamming. It is. I fucking knew it. It's such a scam market.
Yeah.
The gold market. I don't know. It might bounce here. It might not. But at this point, it's in a state where we don't really want to engage with it. Like it is at a point where it's like, it's chopping. It's the same way like AUD in a dollar, and we like it's. I think there's a much better market to look at, and that's silver. I think silver was looking much more clear and much weaker. I bet that is looking like complete shit today. Let's have a look.
Probably.
Yeah, so this, remember, Tom,
Yes, I remember.
When we were discussing
I remember.
we were discussing the gold trade, and then we looked at silver, and I remember very clearly
We freaked
like
out.
being like, that is looking much better. There's no recovery that's like the same as gold, so it's infinitely worse. And you can also see it never made it above this neutral level. It actually barely even made it to the neutral level. That was the short position to take. This is the market to trade. It's still in a strong downtrend. That's what we want. So the lesson here is, guys, if you're looking at something like gold, it's not really clear. It's chopping. It's doing whatever. Go to the next metal. Go to the next metal. Look what's going on. If it's the same, skip the entire fucking asset group. Go to something else. But
yes, we did react heavily to this. We freaked out and we're like, oh, this looks like death. Because it was like, man, when was this? This would have been, I'd say, around there. Maybe 2 weeks ago, perhaps. And at the same time, we had gold ripping through our neutral level here. And we're like, oh, let's take a look at silver. And we're like, oh, wow. Like, this is a trade for sure. Something like this here. Right? So, yeah. Yeah, people don't want silver right now. People don't want silver.
Yeah. So, guys, I think that's it for this stream. Well, I really enjoyed this, Tom. I think we're gonna keep doing this. Yeah.
Yeah, man. It was fun. It was fun. I think we we had a bit of a laugh. Hopefully, we educated some people as well. Talked a little bit about some experiences that we've had and so forth in markets. So that's what people need. That's what everybody needs. How do I get into the Tuesday, Thursday sessions, please? Oh, Donovan. So the Tuesday session I'm referring to, Donovan, is the group coaching session for the funded traders. So we do a live session on Tuesday with the funded traders. So if you join the funding program, then you get access to all of the past group sessions that we've done, which are really gold. Like, I mean, I don't want to toot my own horn, but they're gold. And all the future ones that are live as well. So yeah, that's how you get into those, Donovan. Funding.breakfreetrading.com. Alrighty, guys. Thank you very much.
All right.
Appreciate you all. Thanks for joining us. We'll talk to you all soon. And Tommy, make sure you send that screenshot of your trade history into the global chat for us to have a look at as well. Okay, mate? We'll help you out if we can. Alrighty, guys. Thank you. Catch you next week.
Bye-bye.